Welcome to the Thematic Edge. I'm here with my good friend Mark Farrington of the Global Watchtower, and we are back to discuss the latest developments. It's been a busy 2 weeks, Mark, and I'm going to make you do a lot of the work here because you've been really focused on one of the issues that I think both of us have been sort of outliers on in terms of how geopolitical realignment would happen. From my perspective, it's really been about this whole, you know, as I've described it, La Cosa Nostra Americana foreign policy. And yeah, it's rough. Yeah, it's tumbled. But at the end of the day, that is real politics and it would actually work.
Mhm.
Um, you have come at it from a different angle about the international relations theory and strategy behind all of these things, but we get to the same place. So I think I'm going to ask you to review what happened last week at the ASEAN meetings and the APEC meetings out in Asia when President Trump was out there. And then I think we need to, of course, talk about what's been going on with central banks because as listeners will know, I've been a very firm central bank critic. You've been a significant central bank critic as well, and I think we are getting to a point where the rubber is going to meet the road. I've been saying that for a while, so I could be wrong here. Maybe this is more hope, even though I actually don't hope for failure for my colleagues at central banks.
Yeah.
But this cannot keep going on. So let's start with ASEAN and APEC. And what I think is really interesting is that you found the whole ASEAN meeting and actually the lead up to it over the last several months to be far more important than the meetings between or the meeting between Presidents Xi and President Trump. So one, why do you feel that, and like, what did you think was accomplished at the ASEAN meetings, and how does that fit into the sort of train of events that led there?
Okay, excellent. That sounds like a good topic to kick off with. Well, I think that you and I spent a lot of time and energy articulating after Liberation Day that there was a strategic plan behind all this madness and chaos that was announced in Q2. And some of that plan started to be revealed, I think, during the summer when people started to understand that you can't have a trade war with China without working on the redirection of exports and all of the supply chain issues as well. So in a sense, you needed all of your trading partners, allies and competitors alike, to adopt a similar strategy towards China. Otherwise, China would just circumvent as it typically does with sanctions and trade barriers. And so I think ASEA for me culminated in a big signing ceremony of that thesis where our previous view of bifurcation, maybe 10 years ago, would have naturally assumed Southeast Asia was in the US sphere of influence. That was debatable, I think, up until last week, where China had become such an important part of everyone's GDP in Southeast Asia, through the value chain of imports and exports eventually to the West, that many might have viewed countries like Malaysia, Cambodia, etc., even Vietnam, siding with China on this so-called trade war. But as you saw from the deals that were signed, they basically recognized the same risks that the US was flagging in its tariff strategy. And in particular, the critical minerals event, which happened where China began to constrain exports through export license, was recognized as a risk by everyone, including all those in its value chain in Southeast Asia. So the critical minerals deal with Malaysia and with Thailand, MOUs with Thailand and Vietnam, and critical minerals deals with Malaysia and Cambodia. I think they all just validated this risk and this strategy and confirm that when it comes down to it, Southeast Asia is going to stay in the West orbit. That's where the end consumer is that they need to service, and they're going to have to manage the China risk somehow. So I think that was a very, very big win for the geoeconomic strategists behind Trump. And so I would say also that countries like Malaysia were probably a little bit worried about standing up to China. You know, they have perpetually been on the fence, and they're very critical of the West on a lot of social and foreign policy issues. So I think I got the impression that they were happy to use Trump's presence there in Kuala Lumpur as the kind of bully that forced them into it, so that they could go to China and say, "Well, it's not us; it's those bloody Americans forcing us to do it." And that gave Malaysia an out that it probably wanted anyway. And then I think also that some of the other MOUs, like with Cambodia and Vietnam, on critical minerals processing or whatever, these might not end up being that critical and amounting to a lot at the end of the day, and they may end up being, cards to be traded as the U.S. tries to assert its control over the Caribbean Sea, and because really these are countries which are deeply aligned. Cambodia and Laos and Myanmar in particular, they're unlikely, I think, to swing to the West and will eventually stay very close aligned to China. But we've got this near broad sphere of influence battle going on between the U.S. and China, and our Caribbean is China's Southeast Asia, and the U.S. entourage went right into China's backyard and signed these amazing deals ahead of the Xi summit. So that allowed Trump to then move up north to South Korea for the APEC meeting, and be standing there with a pile of reciprocal trade agreements and MOUs that showed China that the world understood the export risk that China was posing, and I think it helped him tremendously. It gave him leverage in the deal. So that's why I say it's so important. Not necessarily more important than getting the final deal with Xi, but I just don't think you would have got the same final deal with Xi unless you had all that success leading up to it.
Well, so what would you say? I mean, a lot of people would say that the U.S. actually backed down, right? They gave away all sorts of things. I mean, eh, one, you can respond to that, but at the same time, my position has been all along, I still don't understand why China is frankly capitulating as much as it is. And that's not to say that the US hasn't capitulated a lot. It's just that I continue to view China's critical position in so many parts of the global supply chain as immense leverage that if they really wanted to, they could shut down US industry, European industry, others within a matter of weeks. And it's not just rare earths, it's in pharmaceuticals, it's in microchips, in not just the auto chain, but every part of the manufacturing process. Refining of all different types of commodities throughout, including oil, for a lot of places like Southeast Asia, frankly. Why have they not brought to bear those tools more forcefully? Why have the Chinese capitulated is my question, but there is this other question. All sorts of other people would say, well, what did Trump get? It seemed like he actually gave away stuff there. So how do you answer both of those criticisms?
Okay, I'll do the shorter one first, which is, the idea that Trump, gave up more than he received. The fentanyl tariffs, which, as people need to remember, were the first tariffs announced. And one of the reasons I think Trump's administration felt so confident in announcing unilaterally the fentanyl tariffs in the beginning of the year is because who can disagree with cracking down on a societal killing drug? The Chinese have a history of anti-drug use and very strict enforcement of their laws on drugs. It seemed like an area you could actually get agreement on pretty easily. The pushback against that was many people believed that China was using fentanyl as a sort of hybrid warfare weapon against the U.S. Population, which may or may Okay, may or may not be true. I can't really comment on that. But what I think that if you stand across or sit across the table from President Xi and say, look, we need you to collaborate on drug enforcement. This is something that's important for both of our countries. Let's be reasonable. I think you have a better chance at getting an agreement than some of the other topics. And remember, Treasury Secretary Bissent has said publicly a number of times that you know if imbalances go away, tariffs are meant to melt away. Well, for sure, the fentanyl tariffs is the one is supposed to melt away the quickest. If we get the compliance like we did from Mexico and not enough from Canada, but mostly from Canada and China, the fentanyl tariffs should melt away to zero. So I think Trump just offered a little down payment on that. It was only 10%. There's still a long ways to go, and I think he will continue to use that, carrot approach to entice greater cooperation from China. And I think China, in the end, will agree that that's a problem that's not serving anyone's interest, and will collaborate on. So that's one point. On the bigger picture story that you flag, I think that it gets back to what many of us called was this own goal on China's side by announcing export controls globally on critical minerals. I mean, this affected batteries and this affected components and a whole host of just ordinary consumer goods across nearly every country in the world, including its own value chain in Southeast Asia. I mean, that is really what galvanized consensus in ASEAN about what the risks were, because it was so generic and broad-based as a retaliation against the US for something incredibly specific. NVIDIA's number one most powerful Blackwell chip, being controlled, and an expansion of the export control list entities and things like that. So I think that they both took a step back from this stance on the entities list, the so-called 50% subsidiary rule for the US, and China on its global critical minerals, export controls. So I consider that a kind of wash. Both walk back, but it doesn't walk back the messaging. The US was attempting to control an extremely powerful technology component that has a whole host of military applications, and China was trying to control, batteries and inputs into what is basically the modern economy. So I think that that's a win in the US, regardless of, the calculation on net tariff or net exports control. And so that's why I don't consider this to have been, a China victory in any sense. And to answer your question about leverage, I wrote a piece last week on weaponizing dependency. I think that critical minerals episode, validated that theory, which is you can create dependency. It's an extremely powerful tool, but as soon as you use it once, the game is over, because now every country in the world will develop a national security policy about reducing dependency. So unfortunately, I think China has, shot themselves in the foot with that one. Their dependency strategy as a form of global leverage has now peaked, and they will see that leverage slowly decline now from all countries, but in particular the West in the coming years.
I don't disagree with that point, by the way. I will say that it was interesting that you said you'll answer the shorter one first and went on for 5 minutes and then answered the longer one in 30 seconds. But I
My
don't disagree.
self-control.
It was far clearer in your mind why the Trump was winning. But anyway, I don't disagree with this point that once you reveal that, you've basically played your hand. But the issue is that that's realistically going to take, it could take 5, could take 10 years for some of these things. And when you look at what's going on in Europe, like, I mean, I wonder whether it's going to take a decade or more. Their response to all these things seems to be incredibly weak, and they are dealing from a very weak hand, I think. And indeed, one of the events of the last couple of weeks that I thought was most interesting was this Nexperian um,
Yeah.
uh, fiasco, right? Where the Dutch government came in, I believe at the behest of the Trump administration, actually, if I recall correctly. It's not,
At least in the same direction as
yeah.
policy.
And they produce these, cheap microchips that are used in all sorts of different equipment, but particularly are important to the auto industry. And a Chinese company bought them out some years ago, and the Dutch used some obscure law to be able to go in and seize the company. Unfortunately, they didn't take account of the fact that all their factories are in China. So the Chinese said, "Okay, fine, we'll seize the factories."
Yeah, also they were just trying to comply with U.S. policy. I don't think it was an economic decision. Otherwise, yeah, they would have
But I
recognized
mean,
it.
this is to this point that, China has this whole, it's a multi-layered segment that's going to take years to overcome these things. And, I've always felt that this is the battle that the Trump administration is fighting, is that, you know, the West has allowed itself to be put in such a bad position that it's going to take years for them to come out of this. And over that period of years, the US or China has a significant advantage because the West has just allowed themselves to get so far behind on so many different things. And
Yeah, I think you're right on that. But when people flag what looked to be a kind of moment of oh, I don't want to say camaraderie, that sounds too deep, but a moment of understanding between Xi and Trump as they kind of stared at each other across the table. I think they both understood that a aggressive trade war is detrimental to both sides.
yeah,
So it's almost like they're fighting the war a little bit honorably. So China was allowed to preemptively export and dump everything it could in the first quarter before Liberation Day, as was everyone else. And now the 1 year reprieve on critical minerals is going to give the US and surely the Europeans and Asians all an opportunity to stockpile critical minerals. So they're going to, imports of critical minerals from China is going to go through the roof everywhere in the world for 12 months. And then who knows? Maybe by that point, China will understand the leverage is mostly gone anyway. I'm not a technical expert, but my understanding is it's about a 2 year time frame for closing the gap to say 50% on critical minerals, whereas the technology gap between say NVIDIA's Blackwell chip and the nearest indigenous competitor in China is something more like 10 years. Now that might just be public relations, propaganda, etc. But it is viewed as a technological hurdle versus just a time, effort, energy, and loosening of regulation hurdle to catch on critical minerals. So I view the latter as an easier challenge to overcome. I don't know if that's
so
accurate or not, but that's my view.
I have my skepticism about that. What I will say, and again, I'm going to be criticized as being some sort of Trump acolyte or cheerleader, but I would say that the whole experience, all of this, absolutely validates everything that everyone's been complaining about the Trump approach of broad tariffs across the economy. The
Yeah.
fact is, you don't know what's critical in your economy. This is
Yeah.
why, communism doesn't work or state-controlled economies don't work as well as market-controlled economies because bureaucrats don't understand all the different things that are actually necessary. So the whole approach where we just focused on specific things that bureaucrats identified
Yeah.
was a problem because all of a sudden you found, oh, wait, there's another whole area over here we were totally unaware of. Um, and this is a classic example of it. You have to reindustrialize broadly across the economy. There's just no getting around that.
Yeah.
And building a big tariff wall around the world's biggest economy was a really smart move. And I think this has been validated by the experiences of the last few weeks.
I think you're right on that, and I think you're seeing I mean we've mentioned this in past podcasts, but we're seeing a more frequent and broader set of anecdotes that suggest, former close partners and allies, call it Europe and the Anglo-Saxon countries, etc., plus North Asia and the Middle East. One by one, there has been both security decisions and economic decisions in the same direction as the Trump grand strategy. Um, Either pushback on Chinese dumping, controls on certain types of exports that they had never had on before, or new security arrangements that show that they're no longer going to formulate a strategy on pure dependence on the US. And at the same time, they're not swinging into the hands of the US enemy. They're literally building new regional relationships that allow them greater autonomy from both sides, etc. So I don't want to use the term compliance, but I see this kind of convergence going on globally to the type of new world order that Trump's policies signaled was about to happen.
Look, I actually think, especially when we get to central banks actions, things like that, we're both going to be patting ourselves on the back a lot in this podcast. But I'm just going to pat myself on the back on this one. I mean, I think this all is in line with all the research I did on global entropy, and the as you talked about, both of us were pointing this out around Liberation Day, the sort of horrendous reaction you had around the world to Trump's policies. And one of the points I made at the time was that actually most of the rest of the world had a very positive view of the US and of Trump around this. It was really the Western allies and their elites who blew up at this. But
Yeah.
that's the whole point about my La Cosa Nostra Americana point, is that being nice, I know people would like to think about it that way, but you can go on all day in terms of your international relations studies. It's actually people act in interests, and you know the US coming out and forcing people to face their interests and pushing China to expose themselves as misaligned with all these countries' interests is what swung this all around. And so it was all actually very predictable if you stopped paying attention to, you know, silly, you know, Financial Times headlines about everyone being upset about these things and actually looked at what are the underlying interests. This was
Mhm.
just straightforward. And then cultural ties, strong cultural ties have been very important to this. The countries that have been most culturally tied to the US, the Anglosphere, as much as people like Albanese or Mark Carney or even Keir Starmer have criticized Donald Trump and are offended by him personally,
Yeah.
those countries have moved along with the US more than anyone else simply because the cultural ties are actually really important and they matter.
Mm. So interesting because when you put it in that context like you did, it makes me think that the humans have become like as dependent on large language models as all of the quants because it's like somehow people's opinions are affected by what is repeated the most, the narrative that gets repeated the most, and the country that has the most attention focused on it all get unnatural amount of weighting in people's analysis. We don't analyze China in the same minutia that we do the West because China doesn't release anything. It releases state, curated, official documents and press, etc., or in the worst case, propaganda. It's not an open book the way the West is, and the open book is much more attractive to the mainstream press and journalist world where they can get access to documents and write something. They don't write on China not because it's interesting, it's just because there's not enough there for them to write something compelling and new. And people shouldn't, misunderstand that as one side having all the problems and the other side not, you know? It's just more information about one side than the other. And I think then if you just look at the data points that then really do matter, the deals that are being made, the strategic decisions that are taken, the performance of the economies, the performance of the risk assets in the different countries, it's quite easy to conclude, you know, what's really happening.
Yeah.
So China has, I'm not one of those people that, you know, predict a China collapse every 2 or 3 years. But I can say that China has, sorry?
You've been very good on that, by the way.
Yeah, because China has tremendous resilience against certain types of problems.
Yes.
But then there's a few problems that it doesn't have resilience against. And you know, with the property sector collapse and the NPLs building up a bit in the banking sector, this is one of those areas that the you know, state-driven economy isn't very effective at cleaning up. And the same will be this big reorientation of the global trading system. This is not one that it will respond quickly to and effectively. It's going to struggle too. And so, you know, more needs to be written about that. Instead of throwing it in the category, well, China has all the leverage because it has, you know, 80% of the critical minerals. China has all the leverage because it can produce, you know, 30 million EVs and nobody else can, etc. Those are actually overshoot positions that need to correct. And by correction, that means, you know, profit loss
Yeah.
and profit loss to state-owned enterprises and consequences, etc. But the market isn't ready to write that or focus on it or punish it for various reasons. And you know, to bring it back to the markets that we care about, you know, ultimately, because a state economy is not dynamic enough to restructure internally through animal spirits or competitive private sector competitive instincts. It only relies on macro levers, and historically, it's been currency devaluation. You know, China had a massive currency devaluation in the 70s and in the 80s, and then the last big one in 1994. And since WTO entry, it's had only small adjustments. You know, I think, you know, 5% in 2015 when it was trying to open its capital account a little bit to comply with IMF analysis that was the prerequisite for entering the SDR, and then another small devaluation during the first trade war in 2018-19. Less than 10%, though, 8 or 9. So China has not had a big currency devaluation event for a very long time. And I think this overshoot in all these geoeconomic areas that it wants to exercise leverage is now a problem rather than a strength. And the macro lever that corrects a lot of those is currency devaluation. And I think that is not a very attractive option.
I mean, eventually it might be. I think, you know, I'm going to give you credit here. We should move on to monetary policy, but I'm going to
Yeah.
give you credit here that, like, you know, China's ability to do this. So the reason why it's able to absorb these massive losses
Hmm.
is because they have created a closed loop system where the state suppresses consumption and creates excess savings in the economy that is then monopolized by the state to pay for all the losses of that excess capacity. And because they own all the means of production, they own all the means of finance, everything within that closed loop. The CCP has total control over that. That's why you don't face a Japan-like scenario. You pointed this out to me more than a decade ago. Said this is why China is different from Japan in the 1980s and 90s. You don't have seven zaibatsu. You have one, and and
One
it's
thought
a
about
closed
too.
loop that doesn't care what anybody else in the rest of the world. So there's no question this will be a massive economic loss through time, and that the Chinese people are going to suffer from the Communist Party's wasting of all these resources over decades. But there will not be a financial crisis as a result of this unless there is some sort of revolution in China that breaks that closed loop system.
No, you're absolutely right. That's why I said a currency devaluation. Um, is this the safety valve so that you don't have a financial crisis? I don't think China would ever have a financial crisis because it has, as you said, too much control. It has the draconian control to go in and just take all the NPLs off of the banks, stick them in an AMC, and recapitalize everyone and put them back in business the next day, which you don't have that option in the West.
Yeah.
So it won't have a financial crisis, but it can't control the equity market because
No, but
equity market,
none of that stuff matters. This is what I'm saying. So,
yeah,
but let's move on to the next
okay,
topic because I think it's very related to this. I mean, the point that you were making earlier before we
hmm
went off on that about this difference in information,
yes,
um, information asymmetry. We know very little about what's really going on in China, and
yeah,
what you get is, um, you know, curated data and commentary the Communist Party wants to allow you to see. Whereas
yeah,
in Western societies, for all our complaints about it and for all the things we could complain about, lack of transparency and things like that, overall, you do get a lot more information.
yeah,
And that does have a big effect on beliefs. And I think this is one of the things where, when we think about the central banks in the last week, part of the criticism that I think you and I have long held for what's been going on with central banking is they are trying to, and I don't want people to take this the wrong way, but they're almost trying to act like the Communist Party of China. We're going to control the message and tell you you're going to go in this way. The problem is they don't actually control everything, but there is this illusion of control that has
yeah,
developed,
yeah,
and I think it's really led market pricing off the rails in many key respects. And we're coming to a point where I think the rubber is going to start to meet the road here. I've been saying that for a while, so again, I could be totally wrong, but we are getting to a point where it's really hard. And we did have a pretty strong reversal in the Fed last week, even though
yeah.
they don't want to admit it. So
Finally,
we had the G3 central banks, we had the Fed, we had the BoJ, we had the ECB. Interestingly, so even though the Fed cut, and there was, I think this gets to exactly this sort of feedback loop between markets and the Fed, where the Fed says markets know what they're talking about, so we should listen to them, but then we guide markets and tell them what they should think, and it's this circular loop. We're gonna cut 25 basis points the next meeting. Oh well, now it's priced in 25 basis points. We need to cut, and so they did this, but then they did actually try and change their forward guidance, and I think we can have an extended discussion about forward guidance and QT and all those things. But the net effect of this was you did have a pretty radical shift in the US yield curve.
yeah,
You didn't have that happen in Europe or in Japan. In fact, actually, crazy enough,
yeah,
in Japan, if you look at the OIS curve, it actually came down slightly, whereas the U.S. yield curve lifted quite significantly, and the European curve was sort of in between. The front end didn't move, but the back end tried to move it in sympathy with the U.S. So let me start with, what do you make of what we learned from central banks last week? And then let's get into, I think, this what I've termed being is believing, how beliefs actually drive market prices, but that when it contradicts fundamentals, it will ultimately break, and that break is not going to be pretty. So, but
yeah.
let's start with last week's meetings. What are your thoughts around them?
Okay, that's interesting. I thought you were going to tell me that the central bank's communication policy is a bit like the CCP's communication policy of China, which I think is a fantastic analogy, which I've never thought of. But yeah, sometimes you can become a hostage of your own communication policy, and for sure that's the case for China. So maybe it's not such a funny anecdote. Actually, it's probably very true. In the case of Japan, and that's almost the title of the Substack I wrote this week, is they are trapped by their communication strategy, and they're trapped in two ways. I know you like to make the point that the central banks have trained the markets not to expect a rate cut or hike at the next meeting unless they're told in advance.
Yeah.
And so, and this is a very poor, deformed version of the original idea behind inflation targeting and forward guidance regimes. Because everyone stops analyzing the reaction function and the real economy and just only sits in line and waits to be told whether there's going to be a move at the next meeting or not. Japan has that problem because the stock market penalized Governor Ueda so badly last year that obviously the Bank of Japan is a bit traumatized by that. They've had guidance from the cabinet since then that you need to prepare the markets, you need to improve communication. So now there's no such thing as a live meeting where we don't know which direction it's going. If it's a live meeting, it needs to be 85% discounted. Otherwise, it's actually not a live meeting. So that has become an unfortunate inhibition in the market. But the other aspect of communication, which I think you were alluding to, which is more important, is the forward guidance is not so much about their analysis of the economy anymore. It is their analysis about where they are in relation to their inflation target and where they are in relation to inflation expectations, and then all this theoretical debate rather than an update about what they got right or wrong in the high frequency economic data for the last couple of months and what shocks they see on the immediate horizon that are going to probably intervene in their plan or their rate path. And so the communication between the central banks and the market is just extremely poor now. It's not very fruitful. And I would say to the degree that the Fed had the courage to sort of change the narrative was driven a little bit by its echo chamber. It wasn't so much, as you said, vigilantes penalizing it in the market with breakevens or yield curves. It was more like respected economists and commentators writing about the Fed's seemingly failure to acknowledge that inflation's at 3%. One of the best headlines I saw is in the FT was, has the inflation rate target been changed to 3%?
Yeah.
And it was not a joke. It was like written, like, what else are we meant to deduce from this, And so I think the Fed did feel the heat a little bit, the intellectual heat, that they were negligent on this level. And then suddenly, not only did we get two dissensions from the FOMC, we got a lot of commentators come out and say, you know what, I'm not very comfortable with what the market's discounting on the Fed. And then, we got the response. And Powell, I think, looked very uncomfortable in his post-meeting press conference. Nobody's speaking with conviction, and nobody's focusing on analysis of the real economy. And it's a problem in Japan, and it's a problem in the US. And I can't really say on the ECB because I didn't watch any of the press conferences, but I assume it's also there.
They're kind of an also-ran central bank at this point, anyway.
Okay.
Sorry, all my European friends are going to hate me for that one. But look, I think that the underlying issue, and you and I have, I think, been very aligned on this, is that forward guidance of all measures has been a mistake, especially if you're a credible central bank. If you're not a credible central bank, then maybe it can be potentially useful. But all you're doing with forward guidance is setting a benchmark for you to be proven wrong. And frankly, central banks have done a very poor job over the last 20, 30 years. I mean, I make this claim all the time, and it's verifiable. You can go out there. I've done a far better job forecasting the US economy, US inflation, and Fed interest rates in trend than the Fed has. Like, I mean, you look at their revision schedule to the SEPs, it's just terrible. They are terrible. And yet, they insist on trying to guide markets with this. So you've got this on one side that one they're really setting themselves up for failure. But the crazy thing is that markets have actually really bought into this. And I
Mhm.
think, push back if you want. I think this really reflects the last decade. So if you think about what really drives monetary policy, it's interest rates. Well,
Yeah.
what is your policy rate? That is the thing that far and away over anything else matters. The next thing is going to be something like actually the actual fiscal path, not the maturity structure of the debt, the actual fiscal path and what people think it's on. That'll affect this and central bank credibility as well. Then you get to forward guidance to, QE and things like that. That's so far down the list of things that actually affect markets. But we
Mhm.
went through a decade where interest rates weren't moving at all, where because interest rates were pinned at zero, central banks or fiscal authorities could get away with seemingly unlimited fiscal policy, so people stopped thinking that fiscal policy had an effect. And so all of a sudden everyone started focusing on, oh, the stuff that really matters is their central bank rhetoric and these things that they're doing to try and manipulate the yield curve, which if you really look in the data, they didn't. um, but people believe that, and to
Yeah.
that extent you see this, and we've had this debate on this thing before where I say, look, these things don't really have much of an effect, and you push back, and rightly, and I don't disagree with you that people believe they do, so they do, but that's always a temporary effect. And one of the things I point to is just look at the yield curve movements in the last couple of years, right?
Mm.
What were the big movements? The big movements were people's worries about Trump fiscal policy,
Yeah.
swap spreads, term premium all go through the roof in April. And then as tariff revenues come in, well, look at what's happened to all those things. They've started to come back.
Yeah.
This last week's QT, the lead up to it, and everyone talking about ending QT, no effect, none,
Yeah.
really none. So I do think that one big problem out there is that the markets need to be disabused of this notion that the central banks actually know what they're talking about. And then that is going to force the central banks to start focusing on the stuff that you and I think that they should, which is, hey, this is what we're seeing in the economy. This is what our reaction function looks like, but we'll see what comes. And we're watching this just like you are. Here's what we know. Just being transparent about that. Instead of trying to guide market pricing where they want it, because they're just going to fail. And I do think that I'm surprised it hasn't happened yet, given how badly their guidance has gone over the last few years. I mean, they've been wrong on inflation every single quarter. They keep getting it wrong. And yet break evens continue to believe that they somehow are actually going to get back to target without
Yeah.
a strategy. So I don't know. I've gone on a bit of a rant there. I mean, do you did
A well-deserved rant, in my opinion, because you're spot on in that. I think, my past points that I made to you, which may have sounded like pushback at times, but really wasn't. The two issues about forward guidance, or more broadly, the communication strategy of central banks, is that they when like any new tool, they started to play around with it and come up with new iterations. And the iteration when they came up to make time dependent forward guidance, in my opinion, was a compute abuse of the concept. Because when they started to say, we're not going to raise rates for 1 year, or we're not going to raise rates even if inflation goes above our target, when they made those kind of time dependent commitments in forward guidance, it was like saying the real economy doesn't matter. Our macro models don't matter. We're going to ignore them because that's how committed we are to writing this, risk asset recovery. I mean, you can't credibly give a message like that to the central bank and then, 2 years later in the cycle say, we're all about inflation fighting, we're all about hard money or whatever, your audience is just going to look back at you and say, what? Weren't you the guy who just told me to ignore everything because it was full throttle to the floor, regardless of what the feedback from the economy was to be? So I think that was a discrediting episode. And unfortunately, it lingers. It still certainly lingers in the Bank of Japan, where they're committing to normalize at this gradual path, regardless of what headline inflation and all the other inflation indicators are saying. And so then the other part of the communication strategy, which I think has deteriorated, is it was like probably a bit of a drug when they announced QE and when they announced yield curve control and when they announced twist. You got a market reaction from the announcement effect, and
Yeah.
it looked powerful. But to your point, it never stuck. Eventually the underlying fundamentals drove the shape of the yield curve or level of inflation, etc. And so the difference between the announcement effect and incremental adjustments to QT and QE are night and day. Nobody disagrees that the announcement effect is real. Markets will stop, take measure, stop loss or close out positions, but then eventually they'll come back and they'll invest based on, fundamental analysis. Those two aspects of the communication strategy are failures. And I don't know when the central banks will revise them, but that has to be part of the future in terms of restoring credibility.
I think that's coming. I mean, look, I like your analogy about how they just sort of follow down this path and they keep believing themselves and go on it. And it almost reminds me of this, story, nursery rhyme story, or when I was a kid about, there once was a woman who swallowed a fly, and then she swallowed a spider to swallow the fly, and then she swallowed a mouse to fall, and so forth. But this is exactly what central banks have done here. So if you remember, it starts with, back in 2003 when the Fed had raised into the unprecedented or lowered rates to the unprecedented level of 1%. And they said, hey, we're going to hold rates here for a considerable period. And then, of course, 6 months later, they were raising rates. And so everybody said, well, fool me once, shame on you, fool me twice, shame on me. And that's why QE became necessary, because QE was basically a form of credible forward guidance. Well, hey, I'm buying bonds, so I can't possibly be thinking about raising rates. And I
Yeah,
think that they've shot themselves in the foot with that, in terms of what happened in 2021, 2022, where they continued QE all the way up, way past time for them to give it up. And then next thing you know, they're hiking rates at 50 basis point clips and doing 500 basis points over the next year.
yeah,
So I don't think QE will ever work the same way again, because they've actually destroyed the whole guidance mechanism from it. But there is this broader point that I keep coming back to, that it was inappropriate in the first place. This was your point, right? That you can't make these commitments because you don't know the future, and especially when they've been so bad at predicting the future. And
mm,
so I think that is really gets to this point about, we are close to a breaking point here. I think it's been increasingly apparent to people that it was that, the press conferences, especially for the Fed, have gotten just ridiculously confused over interest rate policy. They can't seem to explain it. Well, we're cutting interest rates because the job market is telling us that, but we also know that the job market is labor constrained. Well, wait, which
yeah,
is it,
yeah,
Jay? Is it this one or that one?
yeah,
And I think that fundamental problem, that they think that they control the path with their rhetoric, but then
yeah,
can't even explain or justify their actual policies,
yeah,
is coming to a breaking point. And to exactly your point, the people that, they seem to care about, oddly
mm,
enough, uh, they've started to get actual real criticism from even some academic economists that, hey, what you're saying makes no sense.
yeah,
This policy is getting close to a policy error. And so I do really wonder, are we at the point where that whole view of central banks are going to, they're omniscient, and then, the second great god of markets is markets themselves. Markets, bond markets,
yeah,
no. And yet, if you go back and look at history, bond markets have consistently got it wrong. They got it totally wrong in the 1970s. You lost money like mad in the 1970s investing in bonds.
Yeah.
People want to say the bond vigilantes of the 1980s got it right. The fact is, if you look at the term premia, it took
Yeah.
30 years for markets to bid down that term premia, even though inflation came back down much faster than that. So I would say markets were even wrong then. Then
Hmm.
they were so offsides in 2020, just so offsides. And here we are today, break evens keep getting it wrong over and over and over again. And yet people still want to rely on those things. So I do think we're getting to a breaking point. I mean, am I wrong here? Am I finally going to get
No,
this
you're
right?
right. I think it's a derivative of one of the conversations we had a few podcasts back, where I was arguing that vigilantes are alive. They're just not in the normal places like, term premia and break evens, etc. And now I think we might have to conclude that they may never come back in the break even or term premium space, because that market is driven by some other dynamic which we're not particularly aware of. And the vigilante form might be just public criticism. And it might be replacement of all the governors with different types of people, and shrinking of the size of the Fed mandate. It might be like institutional reform is the vigilante of market effect of this decade. Because I don't, like you, I don't have confidence in the market punishing the Fed either. We've seen the stock market punish White House policy and White House responding, but we haven't seen bond market punishing and getting a response from the Fed. Maybe you could argue, Besant paid attention, and he's been shortening duration and making soothing press conferences ever since. So the bond market reaction in Q2 definitely elicited a response from the Treasury, but I can't say that it did from the Fed.
No, you've seen none of that. So I do, and sadly, they keep pointing to stable inflation expectations. The only thing that they can point to that's stable is break-even inflation rate. Those are not inflation expectations. I will say this over and over and over again. Those have nothing to do with inflation expectations. Those are bond traders' pricing of future inflation.
Mhm.
Actual inflation expectations are set by consumers and firms. That's what drives inflation, and they're not
Yeah,
in the bond market.
yeah. No,
And
so
and by the way, if you look at any measures we have of those, they've all gone up. So how can they talk about stable inflation expectations? And that it is this terrible broken loop between the central banks and markets looking at each other and reinforcing their own craziness. It will break. This cannot continue because actual inflation is going up.
yes, and we talked a bit about the 70s as an analog in the past, and for me, I have never been a fan of one aspect of the 70s analog, which is the second inflation spike that happens in the late 70s. I thought surely it's not possible to repeat that. That there was too many structural events, the breaking of the gold standard earlier in the decade, and then the OPEC forming and controlling oil prices in the latter half. So it was a very difficult period, and I sort of suggest that they can be forgiven for having gotten it wrong twice in one decade. But now, watching this episode, I can really see how second bouts of inflation do take place so close to each other. Because the rationalization of the first episode now is borderline negligent, and the fact that we only had to raise Fed funds to 5% actually to break the back of the first inflation episode. If
The worst of it, they
inflation
can
expect
never fully break it.
Yes, and that's my point is like we never saw the disanchoring of inflation expectations. But imagine if we had both the inflation shock and the disanchoring of inflation expectations. The Fed would have to raise rates well beyond 5% and hold them higher for much longer to bring them back down. That's why historically no one has ever messed with inflation or risked inflation expectations, because the penalty for getting it back under control is so high. And I don't feel like the Fed behaves paying due respect to that potential penalty.
exactly. I mean, this is the problem when people say, well, we need to, you have a dual mandate. Yeah, but all you're doing is robbing Peter to pay Paul.
Yeah.
Because if you screw up inflation expectations, and I'm sorry, I will argue that what you just said is not correct. They did allow inflation expectations to de-anchor. They very clearly have. They're just not acknowledging it. And again, bond markets are not acknowledging it. That's the
I
problem.
see. You mean
Those
by
two things.
the
Actual inflation expectations have de-anchored. There's no question about it.
I see.
And
At
they're
the
going to
consumer
pay a
level, you're
price
talking
for
about,
that
yeah.
in unemployment in the future because they are going to have to raise rates to actual restrictive rates at some point. That is
Okay.
going to happen.
Hmm.
And so, I don't know when it's coming. I do feel like we are kind of at an inflection point here because, again, inflation, who knows when we'll get inflation data again. But it does seem to me pretty clear that inflation is accelerating at this point.
Yeah.
Um, and so that's going to happen. So, what let me bring that back to a lot of people focused on the debasement trade and saying, well, this is why we were all right to be long gold.
Yeah.
I think you and I both have very different views of gold's appropriateness in your portfolio at this point at these prices.
Hmm.
And certainly we've had a retrenchment there, but it's also been the case that, and let's pat ourselves on the back again. You and I have been, outliers on this view that you had a tactical retreat in the dollar following Liberation Day, and that we were going to turn around. And
Hmm.
I think we both identified over the summer we've kind of gone the extent as far as it's going to go, and the dollar is going to start turn. It increasingly looks like we were right.
Yeah.
Who knows for sure, but it looks like we're right on that. That doesn't seem consistent with the debasement trade.
Hmm.
Gold's little retreat here is
Yeah.
an interesting signal. What what do you make of the debasement trade, gold, and if gold doesn't fit in there, what should people be looking at if you are worried? And by the way, should be pretty obvious that both of us are worried about the path of monetary policy. So we're not saying the debasement trade is wrong,
Yeah. Yeah.
but how do you think about playing that so-called debasement trade or policy errors by, I don't think just the Fed, I think across the board, the major central banks?
Yeah, interestingly, the debasement theme, predates the inflation episode. Even like 2019 and 20 going into COVID, the whole shift into cryptocurrencies
Yeah.
was based on a debasement trade. They were, and because they were looking at the stock of US debt and they were listening to people like Dalio and Nassim, who have been predicting the end of US economy for the last 20 years and never happened.
Great stopped watches, haven't they?
Yeah, exactly. So I throw crypto and precious metals and art and wine and everything, all the alternatives, let's call them the non-yielding alternatives, into that debasement trade. They become ever so more interesting when there is this, huge tail risk of a collapse in the fiat currency system.
Well, okay, hold on. There's also another critical element to all of those things. In
Yeah,
in a world where you have zero or negative real interest rates as
yeah,
a discount rate,
exactly.
then
Right.
non-yielding assets can actually appreciate. But
Exactly.
all of a sudden, when we move back to a normal world of positive real interest rates, what happened? Now, the odd thing is, why has gold so?
Yeah. So yeah, but my point is that these narratives they have been building, and gold has little bursts of activity along with crypto and other types of alternative real assets, etc. The most recent surge, the parabolic surge on gold and other precious metals, starts with this, asset seizure of the Russian reserves after the invasion in Ukraine, where it does not, that is not a debasement trade. That is not a fear that capitalism will collapse upon itself through overspending and deficits. That is a geopolitical risk where countries can no longer safely put their assets in another country's custody. So that's conflating a couple of different concepts. And gold really took off. And it took off from a type of buyer that really hadn't been part of the story, which were the central banks. Okay. And I would say that, geopolitical risk, put your geopolitical risk management hat on, it's perfectly fine for central banks, particularly the ones that were buying, because the ones that were buying had very little gold reserves. Countries like Poland and Czech Republic, they lost all of their gold reserves during the period when they were part of the Soviet bloc, and after they were reintegrated into Western European economy, they didn't like buy
You might
gold.
you might think those two countries, especially the Czechs after the Nazis and then the Soviets, might learn that actually buying a bunch of physical gold to store isn't such a good strategy. But
Okay, we can get to that point later. I wrote a point that, gold seizures have a lot higher frequency in history than currency seizures. So that's a
yeah,
different point. But the people who bought gold were the people who didn't have any. The people who all of the central banks that have high levels of reserves, they bought zero. And they haven't bought any for 30 years because it's a zero yielding asset. It's not a useful, it's not, you don't hold it for liquidity. You hold it as a strategic national asset and it yields nothing and you just store it. So that part of the narrative was logical. When it started to become illogical was when people after Liberation Day started to say, this is it. This is it. The US economy is going to collapse now. They've alienated all their neighbors and trading partners, and they have so much debt and they had the twin deficits issue, fiscal deficit for 2025 of 6-7%, and a trade deficit or current account deficit of 6%, etc. And as a result, we were very near the collapsing of the dollar regime and about to introduce a new BRICS-backed gold currency. Like that kind of hysteria was what motivated me to write and push back on the gold thesis, because I already owned gold when that part of the thesis came along. And as soon as one way you can tell that gold is like Dr. Jekyll and Mr. Hyde, transforming from being the most secure inflation hedge to a pure risk asset like Bitcoin, is when vol starts to become higher than equity markets and other real assets. So gold vol started to spike and go through the roof, particularly driven by ETF inflows and things like that. And so it was clearly becoming a risk asset. And so it would not be serving any of the purposes that people were citing for the reasons to buy it and hold it in your portfolio. And it became a classic kind of pump and dump, very similar to what they did to Bitcoin, just a couple years ago. But you see, Bitcoin fell, found a base, and is now, pretty stable. Gold will fall and find a base and will be stable until the next episode of fear, a systemic fear around the fiat currency system and Western debt levels and all the other things that they have used to justify buying it. They will come again. The one difference, though, is now China has fully embraced gold. And China, as the second biggest economy in the world and largest producer of gold, has the ability to really start to imprint gold with its socialist characteristics. And I think that it will use gold as a brand of hard money, because they have failed to make the RMB any kind of internationalized currency that represents, the prominence that China plays in the global economy. By their own doing, they close their capital market and they're so protective of all their capital flows that they don't let anybody actually freely play with the RMB. One of my favorite stats is 60% of US M0 is held overseas.
yeah,
60%. So there's greater circulation of currency outside than in the Chinese
well,
overseas circulation, 1%.
yeah. No, it go well. You're not allowed to, but also it's just nobody wants to hold it. Um,
No,
uh,
but that includes CNH and their overseas subsidiaries still. 1%. It's nobody wants to touch it by design. So I actually think that gold is going to, they haven't quite figured out yet, but they're going to start to use gold as and I mentioned to you potentially like gold stable coins is one way, or converting the Hong Kong peg to be gold backed rather than dollar backed, replacing CNH with gold. They're going to start to experiment with gold being their world facing hard currency so that they can continue to control their population with the
I
RMB.
think that's a, a brilliant thesis. By the way, we're over time, so we need to
Oh,
cut this off about 3 or 4 minutes ago. But
let's wrap it up.
I will just say on that because I thought that actually it would be really interesting to touch on like the U.S. Government shutdown things like that. But just on that, I would just say quickly, like, look, there are gold stable coins out there. Nobody buys them. And I don't think China being behind one is going to change that story because again, now it's even less likely. Why would you buy a stable coin backed by China as a control instrument when you weren't willing to buy it originally? This is why we have dollar dominance. It could potentially all blow up.
All
Uh,
the overseas Chinese will buy it, and everyone who's doing bilateral trade with China that has a choice between RMB and the gold-backed stablecoins, they will take it. So it's not voluntary.
if China enforces it in the trade, if they swap that you have to do this trade now in gold, our gold back thing instead of renminbi, which I'm not.
Either or, like
But
yeah,
they're already like, one of the biggest use cases for dollar stable coins, frankly, in countries where you don't have good foreign exchange access is actually trade with the Chinese. So even there, it's still being very dollar dominated. So
China is the number one producer, though. It gives it more credibility, and it has invested a lot of money recently in making Shanghai and Hong Kong as global trading
I,
centers.
I,
So
I,
it'll
I
take some effort.
I agree. I'm just saying,
Yeah,
why would anyone outside of the circle do that? And so, actually, the argument that you're making, I'm not disagreeing with your
yeah.
thesis. They want to try and do that. I'm just saying it's a failed thesis or it's a failed approach because people don't want a Chinese controlled instrument. That's what they don't want. They don't care whether it was backed by the Chinese government or gold or whatever. They don't want the Chinese backed instrument.
Got you.
And
Yeah,
and
got you.
so
There is a
and by,
definitely.
by the way, look, just quickly before we close here, is you put that together with what you and I have talked about global bifurcation and which side is ultimately going to create growth assets
Yeah.
versus which side isn't. If the Chinese system, which, to a start of our conversation, seems to be a shrinking part of the world trading system,
Mhm.
is going to be gold backed and everybody else is going to be growth backed. Well, guess what? I think things like, the price of US equities in gold terms, or Western equities in price of gold terms, that ratio is going to go. And oh, by the way, guess what? What is the best inflation hedge in history? It's not gold, it's equities. So I don't want to be super bear or super bullish equities here, but if from a strategic asset allocation point, if you're right about China's path, that makes me more bullish about equities versus gold as a portfolio allocation than anything else you could possibly say.
But importantly, don't confuse a gold stablecoin with monetary policy. It will just be payment rails. It will not have any effect on their domestic, broad money growth, which will just be RMB. This is what I'm saying. It allows them to bifurcate their own economy. Hong Kong and mainland are already a bifurcated economy. This is about thinking in new and creative ways to leverage Hong Kong gold and internationalization of the RMB without changing a single thing inside their moat, which is
That
managed
that
by the
that, that,
CCP.
that is exactly my point. That it won't be used outside of they can enforce it inside their system. They can't enforce it outside, and nobody will ever adopt it because nobody wants to be on Chinese payment rails unless they are forced to, because it's a conditional lending situation.
Yeah,
That's
but a gold SCP is neutral. This is the not did I say SCP stable coin I meant because this is the attractiveness of stable coins even in the US under the Genius Act. Offshore stable coins are non
no,
national instruments.
no, I'm going to disagree with you on that one. you are saying that the gold is going to lend this credibility, but who controls the actual stable coin issue, the protocol that is the payment system? Unless China says we're going to set this up as an independent outside thing that anybody can do whatever they want, which is effectively what the US did. The US said, hey, we're going to create a regulated category so everybody sees that this is a useful category, but we're going to accept any stable coin that exists anywhere in the world. It doesn't have to be attached to the US. You can use whatever payment rails, whatever underlying protocols you want. To that point, why would anyone ever use, or why would China even set up the gold one when that already exists outside of China? The only reason to do it is to create a controlled payment rails. Exactly your point. And nobody's going to use that when independent third party gold stable coins exist outside of China and they're not being used. Nobody's definitely going to use the Chinese one. This is my whole point.
I get your point. I just think that if you look at how they use Hong Kong today, Hong Kong is like their little sandbox where they you do market opening measures and grant a lot more transactional and financial freedom in a controlled way, and then they build their North Connect into the mainland so that the elite and the high
Every
earners
one
in
of them has
China also have
failed,
options.
Mark, and every one of them has failed. None of these have
They
ever
haven't
taken off.
failed. They just haven't succeeded to some grand
No,
view of
every single
replacing anything
one
in the
has
West.
failed outside of China. They are used in China because they are told to use it, and you have to use it under the law. Nobody outside of China uses any of these mechanisms. This is my point.
I think that's an exaggeration. I think the degree of success uh, is in the eye of the beholders. When you have an economy with a complete
Have to
closed capital account, what they want is a bit of activity where they can issue dim sum bonds and panda bonds simultaneously and allow the type of investors to choose between the two regimes. And then as China grows in significance in the global, order of things, its credibility, if it behaves properly. This is why I argued earlier they cannot play the dependency, weaponize the dependency card, because this goes against the grand scheme of them having the credibility to be one of the primary underwriters of the global system.
but they
As
can't back
that
themselves and do it anyway.
emerges, they need the tools for people to use. And this is a tool that allows them to keep control of their domestic RMB environment.
Agree. It will work domestically. It won't work outside of their controlled, closed loop system because nobody wants it. But we're just going to have to agree to disagree because we're already more than 10 minutes over time. So let's close it off here. And
Okay, Frank.
thank you, Mark. We'll come back and do this another time because clearly we have a lot to disagree about, which is a good thing because I think we spend too much time
Only on
agreeing.
China's gold, it seems, I think.
Okay. Thank you, Mark.
All right.